Okay, hello and good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, April 18th. Michael Boutros here with you this morning. Great to be here. Amen, Michael. All three Peters are in the house. Pooja, Dagon, great to see you. I got your email. I'll hit you on that today with regards to that Kiwi trade. We'll definitely go over that. Good to be with you guys this morning. So this will be our last webinar here for the month. Next week, I will be in Australia, the following week in Hong Kong. So I'll be all over the place. We'll try to bring back the intraday webinars starting the first week of next month. So keep your eye on that homepage, okay? You'll have the webinar schedule there updated. No change to any of the midweek strategy webinars, and the updates will be unchanged as well. Hey, good morning, Eman. We are going to miss your fabulous webinar tomorrow. Cheers, Eman. I'll look forward to coming back as soon as possible. Like I said, keep your eye on that homepage. I'll update you there as soon as I figure out, get my bearings there, and see what the deal is with net access and where I could do those webinars. So I'll keep you updated on that. For today, got the BOC on tap later this afternoon, or later this morning, I should say, right after this webinar. So we'll hit dollar CAD. Taking a look at euro dollar, we made it through that swing high that we were talking about last night. So I do think it does stretch. I'm not going to touch it here. Kiwi dollar with a nice bounce off support this morning. Aussie Kiwi also a level that we've been watching. We'll take a quick rewind and look back at the DXY. Dollar Swiss held that slope support and ripped higher. Euro CAD with a very impressive weekly opening range. We'll take a look at that. And Euro is also looking at resistance. We'll take a swing back at dollar yen. Obviously, we'll look at Aussie dollar, checking initial support here today. And we got pretty poor CPI numbers out of the UK this morning. You saw the sterling rip back, so did sterling yen. Both of them coming off near-term support here. So a little bit of long exposure is in play. And if that fizzles out, we'll look to get out of that pretty quick, but we'll go over those levels as well. All right, so if there's any other trades that you guys want to review, or if there's anything you didn't hear mentioned that you'd like to take a look at, as always, feel free to throw it on the message board. Let's start off first with what's upcoming on tap this morning, and that's dollar CAD. So, I was kind of just looking at the dollar CAD weekly chart before today's webinar, and just to kind of get a grander scheme of where we are. Remember, the break that we made below 27.25 was big last week, okay? At that point right now, just above that region even, yeah, the 200 or the 52-week moving average, the long 200-week moving average, those converge right there, okay, on the high day reversal close, outside reversal close from last year in December. 618 retracement of that advance off last year's low comes in at 24.67. You're checking, or at least so far for the week, the median line has been resistance, okay, if you look at that. So kind of just looking at where this is with where momentum is, if we do see some sort of near-term recovery, max, I wouldn't want to see anything intra-week pop above this. On a downside break, obviously the lows that we're making, you have to be mindful of 24.67, and then basic trendline support off last year's low comes in around 23.50s. So both of these levels of importance on the broader scale of things. This is our near-term bearish invalidation, is this confluence of those moving averages and the outside reversal day close from December. So just to kind of put the picture of where we are in the broader picture. Hey, Jay, good morning to you as well, sir. Great to see you. That's the weekly chart, right? Here's daily. Now, again, here's the initial lows that we were looking at, 25.44, the yearly open, okay, for 2018, the 618 retracement, 25.82, 25.80. We've been pivoting along that for the last couple of days, so it's getting kind of messy. Near-term targets remain pretty clear, though, on the upside, 26.33 near-term. If we break below these lows again, you're risking a drop towards 24.67, 24.82. Now remember, 24.82 is actually the measured head and shoulders objective target, okay? Left shoulder head, right shoulder break. We talked about this. Longer term play, but here it is, 24.82. That's the downside target. Beyond that is the 618 of the entire advance from last year's low. And that's what you're looking at on the weekly charts. So the levels are pretty clear. Ruth, I will not be able to be here long, you're saying? Ruth, would you speak to sterling dollar? You know what? If that's the case, we'll take sterling next. Okay, Ruth? I got you. No worries. So the bigger picture for dollar CAD, pretty clear here, right? Intraday, here's what I'm looking at. And then here's what we posted yesterday. So like no change to any of these levels. Okay, we obviously popped back above that swing low, so I'm leaving that there. Near term resistance still with that former lower parallel, but really, near term 2633 we just talked about in the daily chart. If we break above that, that's the objective weekly opening range high. It's the objective highs from Friday. That would suggest a larger rally towards that 2730 target. But large story, guys, we're still in this descending channel. We're still trading on the underbelly of this parallel as resistance. All things held constant, looking for exhaustion off one of these two targets. If BOC comes out and this thing rips, that's your bearish invalidation. Okay, and again, the downside remains pretty clear. You're looking for 2482, 2467. That's the first level. Again, that head and shoulders objective measure target, 618 retracement of that advance off last year's low. That's your first area of support. And then again, 2350s, you start to run into that basic channel trendline support off the yearly lows, right? That's here in red. I'm sorry. Right here. Okay. So any questions on dollar CAD? Where we stand, what we're looking for heading into this release? Obviously the downside play is in focus. The interest rate decision has the propensity to cause that real spike in volatility. So all things held constant, looking to fade strength below 2732 is bearish invalidation. Ultimately, any short you take, do something at 2482. Okay, do something. Take a little off, bring your stops to break even or better. That's going to be the pivot point for me. As far as trying to get a tell on what we should be looking for in dollar CAD moving forward. Okay, this is pretty big here. Questions on Loonie? All right, let's see if we can't get a bump in some volatility here. This thing has been a snoozer since the start of the week. But we got the BOC on tap in just a few hours. That's number one. Number two, here's, let me do Sterling for Ruth. Here's what I'm looking at with Sterling, Ruth. So we got that CPI number pretty weak, right? But we got the jackknife lower. I actually like pound yen better. I'll look at that in a moment. Do need to adjust some of these targets. Give me one sec. It's that new high. Just want to see that 38.2 comes in. Decent with the former high day close. Okay. So pound is in, again, my humble opinion, is in for a little bit more of a near-term correction, or at least the risk of a pullback. Let's say that. The basic premise here is, we're coming off of. I'm sorry, guys. Give me one sec. Okay. We're coming off of the 786 retracement. This is a long term. Let me show you the weekly charts, obviously, in Sterling. We've been watching this closely. So Ruth, right here. First of all, this is just the swing highs for the year. So it's the objective yearly opening range highs. And you're seeing a little bit of a failure here. Momentum, it's not bearish, but it's certainly starting to lose its constructive outlook here. Okay. Just on the account of the new highs that we just made, you're seeing divergence, right? Or at least I wouldn't even count that as divergence yet. It's still a weekly candle's not closed, but it's threatening divergence, right? But you're still above the median line of the broader scope of this multi-year formation we've been following. So you want to be cautious here. The reason I liked sterling yen on the rebound, because where it bounced off of on the support today was pretty clear. Here's sterling on the daily. The 786 retracement. This retracement right here, guys, is just the exact Brexit range. So here's your Brexit day of 2016. There's the high that we marked, which was the yearly high for that day or for that year. There was the drop. Okay, there's the gap close that we made. So the 786 of that entire decline for Brexit comes in right here. We turned just ahead of it earlier in the year. And here's a probe and pullback. Now, momentum, nice trigger that we were looking at here. The break fueled a nice little pullback earlier this year. Here's the test of that same slope support as resistance. And here's the whip back. So, I think you can get a little bit deeper. Near term, I'm just looking at the bounce here in pound yen, but you do want to let this go a little bit. I'm still constructive. The broader trade hasn't changed at all. I would just need to see a little bit more of a conviction pullback. Ideal entries would be somewhere along this slope, Ruth, for the longer term play. This is just off of the basic November low that we made. You can see a couple of slopes here, touching here, touching here. Even if we extrapolate to the low that we made for the March open, that even touched the low here. So that slope series converges right down here, pretty close to the monthly open, but as you move out in time, that's going to be a little higher. So I'm kind of curbing my appetite for long exposure here, Ruth. And we'll look at the DXY in a minute too, right? That thing could see some upside as well, which would be down sterling dollar. So curbing my appetite. We made it through the high close for the year. We closed above it, made a reversal yesterday, and here's the pullback. So curbing my appetite near term. Here's what it looks like. I don't have any like real compelling slope for the near term, which is kind of why I haven't given you guys an update necessarily on pound dollar. But let me throw this together real quick, Ruth. Bear with me 1 second. Big drop this morning. Okay, yeah. So the big drop this morning was on that CPI print, right? Weaker CPI. Remember, that's the BOE's primary goal is inflation or price stability, whereas the Fed has a dual mandate for price stability and maximum employment. So certainly, you see CPI data or inflation data in general will tend to move expectations for the BOC pretty abruptly. That being said, I think you just risk a correction here. So give me 1 sec. Let me just take a look at these levels. Clean this up. Channel broke 38.2. We talked about that and the high day close from earlier in the year. Obviously, that's not the high day anymore because we made a new high yesterday, but it's still going to level out that level. So that's 141.34, 141.22 as your next support on the downside. It's way too early, guys, but I just want to see what this looks like. Bear with me 1 sec. Okay, too early to do anything here, but here's the tell, okay? Not sure if you're in a position, Ruth, or if you're looking for fresh exposure, but here's what I'd be looking for. On the rebound, don't mind this slope right now. I'm just leaving that in there for reference to see what kind of play we get, if any, on the rally here. But on the rebound, you're coming up against right now, literally, as we speak. This is the high that we just made is the weekly open resistance, former support, right? Here's the weekly open. You popped higher. You pulled back right into the weekly open, found support there, and launched on the break. Obviously, acceleration to the downside. First area of resistance, you'd start to look, see if this thing fizzles out. Let me take a step back. Near term, I'd be selling rallies while below 42.78. Okay, the high close, that former swing high, that region right there. Forget this trend line right now, but if we hold those former swing lows, the weekly open, if we were to break this range to the upside, I don't want to try to fade this anymore. But I do think if we rally into this region, if you're holding longs, this is where you want to get out. Or at least take off some of that position, start to scale out of the position. But this is where, if resistance holds, you do look for that final drop towards 41.22, 41.34. Okay, so this near-term support, initial resistance, okay, into this range, bearish invalidation, right? That put us right back on the long side. And it's a constructive trade any way you look at it, right? We're still bullish. It's just, does this amount to a bigger correction to the downside, or do we just mosey on higher from here? I would be inclined to think we get a bigger correction just because of a couple of things. A, the price action that we just saw, obviously this was event driven, but it took us through the weekly open and through the weekly opening range low objective. Second of all, this is your deepest probe into oversold conditions since back here. Every pullback has turned ahead of or at the 30 level, keeping the upside slope. This is your first dip into oversold conditions. So on this rally, if price gets into this region, starts to fizzle out, and momentum fizzles out ahead of 60, even 50 would be a more impressive turn. That would certainly keep the near-term focus on a move down towards 41.22, 41.34. Okay? Ruth, does that help? You have a specific question on this, do let me know. Not my favorite play, right? Not my favorite play at this point from where we are. If we get a deeper pullback, I'm all about it. I'm trying to time a decent entry. But for now, I still think, and again, even though I'll show you the trade that I'm looking at this point, here's pound yen. Take a quick segue. So that was number 2. Number 3, we'll do a quick segue, pound yen. So pound yen, you guys, this is the same chart, okay, that we highlighted last week. Now, we do have to update some levels with the new high that we just made. But what I was looking at is this region right here. Okay, so 51.84, 52.16. This is a region we talked about for a long time. The entire advance that we had off the low day close right here, that was sort of the big resistance. We haven't done an update since that because that was our final target, right? We pulled back, found quick support, ripped through late last week, and we were looking at this channel, right? So here's the weekly open. You try to break lower, you test the highs, you fail ahead of the monthly high. Again, you test the weekly open yesterday, you bounce. Here's the break, and it takes us through channel support. This is why the rebound for me looked a little appetizing here. Momentum didn't quite get into that oversold condition. Price came into the same pivot that we were looking at last week. And it's worth, a little bit of an upswing here. So you're already, You're already almost 40 pips off the low. Look, really nimble here, okay? Because we're just playing a rebound. It just broke to the downside. So on this advance, initially, right at that former opening range low, you want to look for a reaction. The only thing that would invalidate the downside would be a breach above here. So I'll be scaling out of the position, taking anything left off as we get into here. Maybe leave a little on, stop at break even if I think if momentum looks healthy. But all things held constant, I do think if you fail here, you risk a bigger break. Okay, it's not a very convincing channel. It's only got a 2-point touch on the support. The resistance looks a little bit more convincing, except for the false break there. So you have to sort of curb your appetite for sterling long exposure. Okay, I do think if you break below the high day close from 2017 at 51.84 level, you risk a bigger dump at that point. Questions on sterling yen? Ruth says yes. I got that one. All right, cool. Awesome, Ruth. You're more than welcome. All right. The yen in general still has me skittish. So we start off the week, and we'll go over dollar yen a little bit later, but we start off the week looking for the yen to give us one last pop higher and then to move lower. It didn't give us the pop, but it did move lower. How strong the yen gets, is it going to be enough to break this pound yen support? I don't know. But look for initial resistance on 52.86 on this stretch. All right, let's go back to the list. Number 4, let's take a quick segue into euro dollar. Here's what it looked like yesterday. So here's euro. Pretty strong reversal wick yesterday on this 2-hour chart, right off the high day close that we made for the year. That was 24.09. Remember, we talked about 24.30 being the broader bearish invalidation level. My assumptions or my expectations or my favored move was for us to hold right here and to see one last low into this region to get the long exposure. Inevitably, we do like the longer trade in euro. Remember, euro on the weekly, guys, this thing is uncanny. We talked about this week, so I don't want to waste any more time on it. But the upper median line parallel on a closed basis has just been rock solid. Okay, and despite the intra-week spikes that we've gotten below it, on a closed basis, it's pretty clear. So look, it's still broadly consolidation. You still haven't even broken basic trendline resistance off the yearly highs. Momentum, obviously precarious there on the pullback, but if we do get that bounce, you're still not necessarily bullish yet. You're not necessarily bearish yet. So anything you take, and guys, in this market, it's really important to stay nimble. Don't, I'm not here positioning for anything longer term just yet. Got to be nimble as the market moves through, quickly and efficiently start to, scale out of those positions, get your stops moved in, and always be thinking capital preservations, because the moves just aren't lasting. Okay, they're just not lasting. You're getting a nice 40 pip stretch, then 30 pip pullback, and then a day of consolidation, then a 60 pip stretch, then a pullback, and then another day of consolidation. So it's been kind of, for an intraday trader, you got to be nimble. Anyway, that's euro on the long term. Euro on daily looks like this. Okay, 2018, again, the high day close, 24.09. We just talked about that level. Just higher is basic trendline resistance. Nothing fancy off the yearly highs. That's the breakout level that puts this broader uptrend in play. Remember, couple of slopes. A, off the April low of last year. It's April. Here's the low. And B, off the November lows from last year. Here's November. Another trendline touch there. Same slope. Okay. So as long as you stay above the monthly open, that slope support, you're still looking higher. It's basically 23. and a breach above this, basic trend line puts you back in resumption mode. So not there yet. Again, momentum is not bullish. It is not bearish. It is really remains to be seen here as far as giving us any clear indication. Intraday looks like this. Like I said, I was favoring a hold here for a move lower into this region. We did slip lower in overnight trade, but we didn't get a clip of 23.37. We turned just ahead of it. I think 23.40s, 23.42 is the low. So we turned just ahead of that. And then here's the rip through the highs. So look, weekly opening range is set. I don't want to, again, I'm not going to be positioning on the long side here for that stretch. Your stop has to be way down here. It's way too far out for me at this point. But the levels to keep in mind. For me, there's no play here unless we get into 24.30. You look for a reaction, either the breakout, you buy the pullback into that region for the stretch in 24.70, or this might be a decent fade if we do get a spike higher. Dollar, like I said, I think does need to see a little bit of a rebound here, so that would give us the move off that region. If we collapse right here, again, for the move lower, that's still the level I'm looking for, 23.15, 23.20. It's your monthly open. It's a 50% retracement of the monthly range. Basic November trend line support that we talked about in the weekly charts, that comes out and converges on a little bit later, but you get the picture. So nothing imminent here on euro, unfortunately. If you caught that low, and you're holding long exposure, even here, guys, if you're going to put in a lower high, you want to be fading out of that position. Scaling out is always your best bet on these moves. But stay nimble, okay? Let's look for a break of this range. Either a spike in 24.30 and look for a reaction, or if we get that dip, I'm looking for more stringent support near the monthly open at 23.14, 23.20. Questions on euro? Okay. Next up on tap is Kiwi, another one that we have been tracking very closely. Obviously, the swing trades got involved in this one pretty quick. I covered this yesterday on Daily Effects if you saw that update. But here is what the broader picture for Kiwi and why we started to look lower to begin with. In the weekly charts, there's two levels of interest that we've been watching. A, the high week close that comes in at 73.90. B, the actual yearly high that comes in at 74.37. So you have two levels of basic resistance that you're looking for possible reaction off of for a pullback play. It's also the objective yearly opening range highs. Remember that this trade still remains in the objective January opening range. Nothing's changed since that initial 4-week stretch. We've been in that range ever since. So obviously, as you head into the range highs, you start to look for the high day close for the year to offer some resistance. Bearish invalidation would be 74.37. Again, the yearly high, objective high opening range. And you also have basic slope resistance for this multi-year formation we've been following off the 2011, 2014 highs. That converges right there. All right, so right off the bat, one of these levels you're looking for some reaction off of heading into the weekly chart, right? Weekly. Key support on the weekly chart, well, range lows converges right on the 52 and long 200-week moving averages. Okay, just below the 72 handle. So you know what the broader picture looks like for Kiwi. That is your world for Kiwi right now, is this near-term range. Here's what it looks like on the daily. All right, so the high that we made was actually a very nice basic and objective 786 retracement for the decline off the highs we made in 2017. Again, basic trendline resistance off the 2017 was right behind it. Outside reversal day off that high certainly casts a bearish shadow. What happened in momentum as we made that outside day reversal off that high? You got to hold at 60. Okay, so the pullback, well warranted. Initial support, this is your first area, 73.03. You have the former swing highs from December of from the high that we made in March. You have a 38.2 retracement from the advance off the March lows. Intraday, here's what we were looking at. Okay, so there's your daily chart. There's that 38.2 retracement. Bigger support is at 72.75. It's your 50% retracement. It converges on basic trendline support. Okay, but first things first. Here's what it looked like on the here's what it looked like on the intraday chart. Okay. Said stay focused below 73.56, just bearish below that region. Near-term support was 73.24. If we break that, you do have a really quick target just below. Now I put 73.10 on the intraday chart as the intraday target. Obviously, the 38.2 retracement comes in just ahead of that at 73.03. Or just below that rather. So we probed into this region. I'm always going to rather put my intraday chart or intraday levels on the inside, right? So you probed a little bit below it, but there's channel support coming in to save the day. Here's the rebound right into resistance. Now, Dagon, I want to take this minute and kind of address your question. So Dagon sent me a chart. First of all, Dagon, really nice job. I'm going to say when one of you send me a chart to look at and I can't tell if it's my chart or your chart, that's a good thing, right? So we're on the same page. My issue with the chart that you sent, Dagon, is, so you said, well, let's talk about what Dagon was talking about. He said he was looking at this, right? And he looked at this chart, and this on the hourly chart looked like a straight drop, right? He looks like he just wanted to sort of jump in on the short. But when he brought it into the 5-minute chart, he said it looked like it needed a rebound as it was coming into this low. And this is the chart he sent me. And you're absolutely right. You're absolutely right. There's a lot. And I was really happy to see that email because you're looking at the right things. On that last low, momentum made strong divergence, price action lower low, oscillator higher low. And even if you were just to connect the basic trigger break here, that breach would have given you a long signal, actually. Okay, so where you're looking to where you took a step back, Dagon, to look for the rebound, I'm with you on that. My issue is what you were looking for that rebound to attain. So you said you're looking for some pullback to 73.10. That 73.10 level, I see your reasoning behind it in that you were looking at a slope level there, right? But remember, we always want to gather as much evidence as we can to kind of validate what we're looking at. And I wouldn't be just targeting a slope that I haven't necessarily seen a reaction off of before. So if I were to look at your chart, and I kind of just take a look, let me kind of just show the guys here what you were looking at. I think it's a good lesson. So, here are the charts that Dagon was looking at. And yeah, you see that low? I see what you're looking at here, why that was your target. But this slope, Dagon, is based on what? It is a parallel. Certainly parallels do hold merits. But have you seen any other inflection off that? The only inflection that we got was that when we broke, we accelerated, which is good to see. But I don't have anything else at that level. And I don't want to just be blindly chasing targets, right? So as opposed to that, I would rather you be looking at the median line, i.e. that last swing low. Now you have a confluence region of an objective swing low and the median line of the formation that we're looking at. So that would be a better topside target. Now it only shifts your level about 20 pips there, Dagon, right? You're looking at 70. You were looking at 73.10, 73.28, 73.30 ends up being where the former lows were. Also ends up being that 618, and that would converge a little bit better. So that's the only sort of critique I have about the levels and the way you played it. Love what the thought process. Love the way you're thinking about it. But when you're looking to play that rebound, I know you're trying to, you want to just get in. So as soon as you get a decent rebound, you're like, okay, let's jump in here. Can't be like that, right? We need to let that rebound reach some sort of significant technical level. That's when we start to fade it. Dagon, does that help? I hope that offers a little bit of picture. And again, if you take a look at this chart right here, this is a perfect example. Okay, when we got that rebound, so you're working with a little bit different of a slope, but even if we're working with the same stuff, I had the 50 line there, I had the 100% extension, so 2 equal legs down. On the rebound, this is where I'm looking for initial resistance, 73.30, former swing lows, former swing highs, decent level, right? So if we're looking for the pullback, Dagon, this would be your first area. Now, having said that, you have a momentum trigger here that looks like, could be an issue. Take it from the high in price. So that would be this high, right? If we were to see a topside break here and a rally surpassing 73.30, then you're risking a larger advance. Yesterday, we marked our near-term resistance and bearish invalidation at the weekly open. I would, postulate at this point that you might want to just take a look at this region. If we break higher for resistance, again, that would be the median line for the slope that we've been following and basic channel resistance. Okay, former swing highs from yesterday. So I am looking for, ideal scenario you fail here. I don't have any exposure on this, just as a disclaimer. But we'll have to see how the U.S. markets open. If we do hold that trigger and move lower, it might be a decent play. Next downside target, 72.80 to 72.73. It's the 1618, 50% retrace. Just ahead of that, you have that lower parallel. So I would choke that up just a little bit. Okay, but look for initial resistance right here. If we make it through 73.30 on the open of the U.S. trade session, you're likely to get a bigger rebound towards that 73.50, 73.45 level. All right. Any questions here on Kiwi? Dagon says, yes, thank you very much. Hey, you're more than welcome, Dagon. And keep the good work, man. I see improvement. And, we'll keep talking through any questions that you guys have. You're in the right spot. So keep it up. Just some fine tuning, I think, on your end. But looks pretty good. Questions on Kiwi? All right. Finally, some clarity. If you guys remember, I haven't even actually given an update on Kiwi in a couple of weeks. It's just not been something I've been, very keen on. But as the weekly charts start to reach extremes, as the daily chart starts to reach extremes, that's when it starts to become interesting. When you get a trade that's sitting in a yearly range, you could get chopped the hell up trying to intraday trade at. So your best bet to attack those trades are when they are at the extremes. If it's at the extreme range high or extreme range lows, major pivot points like that. Okay, Aussie Kiwi is the other Kiwi cross that I was looking at. And if we do get the pullback in Kiwi, this is number 6 on the session. The Aussie Kiwi should be a decent play. Why? Well, we're coming off a pretty big area. Here's Aussie Kiwi. What was the last update? Here we go. So for Aussie Key, remember on the previous update, the previous day, we were looking at the weekly charts, we were looking at the daily charts, both coming in some pretty big confluence areas of support, former trendline resistance, basic channel support, 764, retracement of the multi-year advance off 2016. Daily chart also had us coming into a pretty nice level right there. Okay, nice reaction, trigger resistance right here on the daily chart. We're still looking for that break to confirm. And intraday, this is what you look like at the start of the week. As we said, there was no merits, to actually working, aggressively with this slope yet. But if the upside is still in play, we should be looking for support ahead of one of these two targets. Bullish invalidation at the low day close. The breakout level we really need to see is right here. The monthly open, this slope, If we clear this region, you're on to 106.30 and above. But we need to get through, sort of that swing high, the monthly open resistance to validate that a more significant low is in. Okay, here it is on the daily chart. Where's the key? Okay, right there. Here's the monthly open. What else is there? What else is there? Just higher. Basic median line of this multi-year formation we've been following from 2017 highs. Okay, so initial resistance, but broadly speaking, we're looking for validation. This is a more significant low here. So you could get a pullback off this region, but ultimately I'd love to see that hold above 105.50. That's the broader picture on the daily chart. Here's intraday, guys. Really nice mark here on the momentum signature. Does that a trigger break right there? It's tempting, right? 1, 2, 3 touch. It's tempting resistance trigger break here on momentum. You have to look for the daily close today to validate that one. But here's what it looks like on the intraday. Okay, so the first initial pullbacks that we got held support right as expected. Here's what it looked like last night. The start of the week, there's 105.55, 105.55. We came right into the April open yesterday and pulled back. And I kept on saying, all things held constant, it looks like a weekly opening range, but the weekly opening range is taking shape just below resistance. So on the snap break above 106, I think you'd expect to see a little bit more of a run, of an accelerated rally. We're not getting that right now. Okay, so you did get the target at 106.03. But if you're holding anything here, guys, just be careful. Momentum's looking tired. You're not getting any fresh highs on the momentum oscillator all throughout the course of the week as we make fresh highs on a closed basis in price. I want to be long, but I can't get long from here. If you're holding any decent long exposure and a stop, you can allot a stop below this low. I say look for 106.40, 106.39 on the stretch higher. But for new, fresh exposure, guys, you're just going to be chasing here. I would not try to fade it either. I know we're coming into some near-term resistance, but on whole, Aussie and Kiwi in and of itself, I'd rather be long this pair than short. Okay, so it's a pullback to the 50 line to see if you can get entry. If you break higher here and you get some sort of corrective pullback before attaining 106.40, might be a decent entry to get back into 106.40. But Aussie Kiwi, if the consolidation breakout is legit, I do think you want to be buying pullbacks while above 105.55. And again, at this point, 105.55, guys, becomes the objective weekly opening range lows, right? So if it breaks that objectively, you're kind of SOL, right? This thing's probably going to see a little bit more of a drop or of a steeper drop towards the low day close again. But that's what I'm looking at in Aussie Key. No change to any of the levels. I just think you need to give a little bit of time here for the pullback to get long. If you're holding long exposure, nice area to take some off here. Like I said, next upside target is going to be 106.40. Questions, comments, concerns, Aussie Key. Back on the menu after a couple of months of dormancy. Okay, DXY. Circle back real quick, take a look at what the dollar looks like here into the open. Intraday, it's, again, it's pretty ugly. Daily, it's pretty freaking clear. Here's the weekly charts, right? The analog puts us inside the range of this week. Broadly, you want to see a lower move on the week, but nothing real compelling here, right? This chart hasn't changed in quite some time. We're still following this analog. Broadly speaking, we'd like to be bearish, but you're at basic yearly slope support. Okay, so monthly open resistance is what I want to see this thing hold. You checked it last week perfectly on that rally they made back on the 12th. You moved right off. Here's basic trendline support off the lows. Okay, the breakdown levels to get 88.27, 88.17, what we're looking at on the weekly chart, is right here. Okay, forget that's the 100% extension per se of that decline. More so, that is just basic downslope support, former swing monthly lows. And again, if we do clear that, I'd put us right back on target. But the DXY, support is support. I'd like to be bearish, but support is support. So I wouldn't be too surprised to see a rebound here, which is why the reset on a little bit move lower on the euro, a little bit move lower on the sterling wouldn't be too surprising for me. But here's what DXY looks like on the intraday. And here's what we look like earlier in the week. Okay. So yesterday we added this basic slope off the high, which I'll show you in a moment here. But the key support that we were looking at, 89.28, 89.33 near term, it held. You saw a big sharp rebound here. We were looking at this yesterday in the webinar. The rally failed yesterday right after the webinar at basic trendline resistance, this basic slope off the highs, pulling back. Here's the breach. Now, your weekly open is still 89.83. You turned ahead of it. That's typically going to be sort of bearish, right? You make a weekly open, you start to drift lower, you come into a big support, and the rebound was welcomed. But on this rebound and the breakout of that trend line, this really should have surpassed it and seen the tag of 89.90 or even 90 on the upside if you were going to get a larger rebound here. So, my hesitation is, like I said, I think this thing could chop a little bit more sideways. I do think it could see a little bit of recovery. I think it can even get a tag at that 90 level. But with that reversal we just made ahead of the weekly open, and with that key support, right now I'm just looking for a break of this range. Weekly opening range, 89.83, 89.28. That 618 is what I'd be looking at, is what we're looking for the focus on DXY. Okay, forget that slope for now. Pretty clean hold on momentum on 60, so you can't get bullish. But at the same time, what are you going to do? You're right slap in the middle of the weekly range. All right, so know the levels. Look for a break of this near-term range in DXY. Chop fest continues, but yeah, I hope to get some clarity into the close of the week here. That's number 7. Any questions on DXY? Swissy. Talked about this one earlier in the week as well. We've been following this basic slope support in Swissy. It's been disgusting. Off of the yearly lows. A parallel extending off the low that we made in March has just continued to catch every subsequent pullback. Looking at the intraday charts, start off the week, we got a test of the 50 line here, pulled right back, lower parallel, caught this like a hawk. So we were talking about very, very basic stuff. Median line resistance trigger break here. Momentum is holding 40. If you see this break to the upside, you see defense of lower parallel or a break back above 96.13, you basically look for a resumption again. The breakout level needed to be the 200-day moving average. Okay, you have 96.55. You had again the median line that came into play and the objective April monthly opening range highs. So very clean. Key slope support, structural support, yearly opening or monthly opening range highs. That's your world for dollar Swiss. Here's the inevitable move that we saw in overnight trade. Obviously, the Ripperoo took you right through. If my chart wants to update, there we go. The Ripperoo took you right through 96.13. Outside reversal candle on a 2-hour chart, pretty nice. The momentum, like we looked at, held 40 like a charm on the way down. Here's the breakthrough, the objective weekly opening range highs. There's a 200-day break. Didn't quite get the tag of 97.13, which is the next upside target. So on this pullback, if this thing has legs, I do want to see support into this region. And then you'd still be looking for that stretch into 97. Just ahead of 97.13, by the way, at 97. Some reason MarketScope doesn't like my daily chart. What's up? All right, well, here's what it looked like on the daily charts yesterday. The 200-day moving average, okay, in black, it comes just above. It's that 96.50 region, but ahead of 97 is this. I guess I'll show you on the weekly charts. Right here, okay? And this is why I want to curb all appetite on the long side right there. Oh, hell, missed that one, says Digon. Which one is that? You talking about dollar Swiss? You can't get them all, but yeah, it was a beautiful play, right? So look, right here is what I wanted to show you. Daily chart's not cooperating, but on the weekly chart, it's pretty clear as well. You have the long 200-week moving average, 52-week moving average, 618 line, okay, of that near-term descending slope pattern formation we've been following from 2011 and 2017. So nice, decent gradient, not really much of a play in the close of last year, but it was the objective January high. We literally peaked right into it before we pulled lower. Here's the confluence region yet again. Okay, so would I take a short? It's kind of hard pressed for me to take a short, but if anything, I would be looking for, if you're looking for near term, that's the play for me, would be an exhaustion here. Now on the intraday chart, you don't have that conviction yet. Okay, so I wouldn't just start jumping on it just yet, but there are things that are starting to pan out to that degree. A, you saw the 70 break back below 70. Typically, that is your short trigger. But B, this is the break that would need to happen for me to be even thinking of playing a short side on this. Okay, because if this is a break of resistance, a breach of the monthly opening range high, objectively, you'd look for that to offer support before the next leg higher. So you have that long-term slope that you're looking at on the weekly charts, which could cap things here. You have those longer-term median moving averages, which could offer some sort of kickback. But if this initial stretch has legs, I want to see support hold here. Okay? Any questions on Swissy? I don't know what is up with the daily chart here. Okay, and here's what I want to show you on the daily chart. It works on this template for some reason, but long story short, divergence, right? So far you have technical divergence, momentum not confirming a fresh new high close in price. So for a couple of reasons, I think you could get some kickback here. All things held constant, for this immediate stretch higher to give out, you'd need to see a break back below the 200-day moving average. Okay. Any questions on Swissy? Oddly, interestingly, actually a pretty clean trade. Okay, that is number 8. Number 9 and 10, EuroCAD and EuroAUS. Just going to run through these pretty quick. Here's EuroCAD. I just want to make sure you guys know all these levels ahead of the BOC. Still no change to any of the levels that we talked about from earlier in the week. So here's EuroCAD. A few days ago, we highlighted resistance at 156.26. That's still sort of the breakout zone. This channel is still something you want to see respected now, because you have gotten a couple of clicks off the highs. That's basically where we're turning from now. Weekly opening range is well defined right above support, so 154.85, 154.86. I'd stretch the opening range high for the week into 156.26 just to complete a basic 236 of that decline. So look for a break of this range. All things held constant. Again, dollar CAD with where it is, Euro CAD with where it is. All things held constant. I'd like to see actually a little bit more of a rebound recovery in Euro CAD here. So let's see what the BOC gives us. It doesn't look like it likes any of my daily charts right now, guys. There we go. Okay, and this is why, right? The rebound play. This is, nice confluence region of levels. You have broad long-term. This is a multi-year, right? Median line formation, resistance all through last year's high. Pivot this year, resistance for the opening range high, break, support, converges right on a basic 50 of the yearly range, and confluence, near-term parallel support. Boom. So you could sit here for a while, but if you do get an upswing, I think you get a little bit more recovery. Got the sound breaking up. Okay, I think we're back. You might get a little bit more of a recovery before the setback again, but just keep your eye on the weekly opening range here. I think it's pretty clear. Once you get the break, I think you get a little bit more of a definitive near-term play on this one. Euro Oz, also one that we've been following this week. Okay, you're at resistance. Plain and simple. The levels are pretty clean. Here's what Euro Oz looked like earlier in the week. We talked about the fact that we were, very hard pressed. Once we were breaking through 160, a couple of weeks ago, I thought this thing was done, and that you were just going to go straight into the 165 region. Got a reversal. It pulled back. Here's where we started to get our focus back in the play once we got back below 160. And here's the intraday chart that we were looking at. So on the reversal off a basic 38.2, slope support last Friday, move higher. Here's what it looked like, a couple of days ago. We wanted to stay constructive above the weekly open, but this is really the tell. 59.84 break, which chipped the focus for a larger recovery. All things held constant. This was the target for the longs and also a possible entry for exhaustion, right? Here's Euro Oz now, and I'm still thinking the same exact thing, guys. We stayed constructive above the weekly open. There was a pullback, turned ahead of the weekly open. There's the tag of that underbelly of that basic region. Friday's high, 59.63. The 50% retracement, 59.84. That's near-term resistance. Momentum, really struggling here at 60. Okay, so look, if you get the break and pull back, the downside play basically targets the weekly open first, but then right back into slope, just ahead of the lows. So it'd be like 58.20, let's call it, as a target. But certainly if you do clear 59.80, you're probably in for another rally towards the high. I really do think you get a fizzle here near term. Questions on Euro Oz? That is number 10. Okay, last two on the list, dollar yen and Aussie dollar. So the abomination. looks like this. All right. Here's what we looked like on the updates. We went over euro dollar. Here's the abomination on the Sunday open, right? So the idea, remember, on Sunday I was telling you guys, the best play for my eye scenario would be 2017 low day close clip 107.84 or 108 for a drawdown, and look for a break of the median line here to give you a little bit bigger of a drop. So that was the high, literally, of the week. We came to here, we gapped higher, we filled the gap and just kept on drifting lower. So we showed you this chart yesterday. We took a basic parallel of the same median line formation we've been following off this low, high, low. Okay, these are the red lines are just parallels. Off these two swing highs, you saw a pivot, obviously acceleration on each attempt. There's support. Caught so far the weekly lows. And so far, this thing has just set a basic weekly opening range right above slope support. So if you get the downside break, you get the pullback in the dollar, some yen strengthening. I do want to see 106.57 and even just a bit lower here into this confluence support region, former trend line or channel resistance. Support, converges on the lower parallel. So 106.57, 106.45s. If you get the breakdown, I'm not trading this thing, guys. It's so tight and it's just not. It's not my ideal play. I like that the formation is holding so clean. But if you feel compelled to trade this, guys, really near term. Play the levels as you see them. Play the slope as you see it. It's not screaming any type of longer term directional trend right now. Okay, remember we're coming from on dollar yen. This is why I'm so precarious. Is this a break of the upper parallel and we're riding it as support? Break of resistance, check it as support, then move higher? I don't know. No clarity there. Momentum. What the hell do you do with that? Absolutely nothing. Looking at this on the weekly charts, okay, there's your huge pivot from last year. Last year, low week close, initial opening range lows for the year, gives you 107.83, 108. So again, use caution on dollar yen. It's just not worth it for us to get aggressive on this. But near term, that's sort of the play that I'm thinking of on the intraday charts. Okay, if you get that one last drop, you get a break, dollar pullback would be pretty nice to see sort of a test of this region, see what happens here. At the end of the day, if you break the weekly opening range high, you're looking again for 107.80, 108, both levels of which still risk a near-term exhaustion trade, meaning a rally into it, then a pullback. So not my favorite trade, but the slope and the formation structure of the ascent still looks pretty clean. That's number 11. Last but not least, Aussie dollar. My man, Aussie. It's been a slow snoozer of a week here too. Most of the action, guys, by the way, has been on the crosses. You probably already noticed this, but Aussie, last week we were all over this thing. We were loving the rebound off of major critical long-term confluence support. Y'all have seen this before. Big, huge level of support for Aussie. Made a huge reversal weekly candle. Didn't close with a lot of fervor above resistance, but here we are, still checking slope. So again, this is still your key area of focus. Early in the week, it looked like it wanted to pull back a little bit, which is why we were taming our expectations. Here's what Aussie looked like into the start of the week. We were looking for a little bit more of a pullback into slope support. Okay, that's dollar yen. We're looking for a little bit more of a pullback into that's Aussie Kiwi. Where's my Aussie chart? There it is. Looking for more of a pullback into slope support, 38.2. That was at 77.46 to start the week. So we did actually get it a little bit later than expected. Here's the open for the week now. So we held resistance as we had noted, initial resistance 77.87, that region. Probed right through, but here's the pullback. Obviously later in time, that same slope came right here. That same level, 77.46, was the exact low. Here's the move higher. I'm inclined to think, okay, you have another low to make, like maybe a drop towards 77.30, 77.20, where we wanted to, that's our bullish inval since the start of the week, right? As long as you're above this, you're constructive, just on the basis of the breach that we got and the basic rebound off major key support. 100, you know what I mean? It might not complete the 100. It just might be an ABC. And if we break through 77.87, you're right back on track for 78. So again, one of those trades, guys, where you're basically unchanged. Here's your weekly open, guys. You're basically unchanged. You're slightly higher on the week. You're sitting right slap in the middle of the weekly range. I haven't been focused on these. I've been playing all in the crosses. Aussie Kiwi, even Aussie Yen. You know, you had a little downside break there. I think was a little bit more compelling to actually try to play it. Nice channel resistance, really clean break below 70 last week into the close of the week. That would have been your trade into slope support. But even this break of channel support of the ascending channel, not much play there, right? So for Aussie, long and short of it is, I still like the broader upside. I just think it's losing steam here. And while the pullback found support exactly where we wanted, you know, below 77.80, I still think it's at risk. So for me, the ideal scenario would be break down into this region, look for exhaustion, possible reentry. Or if we breach 78.12, well, now we're looking for, you know, a larger breakout in the broader decline from the reversal off support. All right, so that is number 12, Aussie dollar. And that's the last thing on my list. Guys, seeing as how this is going to be my last webinar for the week, and no webinar next week because I'm out. So let me know if you have any other questions or trade setups that I can address. We'll be keeping you updated on SB Squawk. And like I said, the updates and the midweek strategy webinars will be unchanged. But keep in mind, we still have the BOC on tap shortly after the close of this webinar. You have the Fed's beige book today. The beige book, you know, it has a propensity to move markets if you get something offbeat. The beige book members the Fed's assessment over the 12 districts on growth, inflation, employment, all that good stuff. So I don't really necessarily expect that you'll see a major play off that, but you know, the levels are pretty clear. As far as the DXY is concerned, 89.28 is your line in the sand as far as the support that you need to see break. And we'll be looking to see if these moves fizzle out, guys. As far as the euro is concerned, still that move towards slope resistance could be in play in the cards before a broader pullback coming in some pretty precarious levels. Look for clarity into the close this week, and I think you'll get it. Okay, well, guys, no other questions. We'll go ahead and wrap it up there. Stay tuned. Obviously, Jamie will be on tap in just a little bit for today. Have a safe flight and trip, Michael. Good luck. Thank you, Eman, and thank you for all of you. I will be keeping in contact, like I said, on SB Squawk. Thank you, sir. Have a nice trip. Thanks for everything. Have a nice trip going to my part of the world. Peter, you're in Australia? I'll be in Melbourne, so maybe we can pick your brain for a little bit. New Zealand, pretty close. Maybe I'll make a weekend trip, right? All right, guys. Best of luck trading. Keep your wits about you as you head into the CAD crosses in just a few hours with that BOC, and I will see you guys in a few weeks. Cheers.